Welcome back. Still watching the special edition of ET Interview, where I'm in conversation with Ramesh Damani. Ramesh, let's talk about the philosophy that you follow while investing in bear cycles, the thumb rule essentially for viewers watching us right now.
Well, the first thing is stay invested. I think other than at market extremes, when the market is heavily overbought and after many years bull run you want to get into some cash, but stay invested because timing the market is generally a foolhardy business. Think for yourself. I mean, because great opportunities are rarely advertised. You have to do the groundwork yourself and buy cheap. It's always a great thing to buy a rupee's worth of thing at 30 cents or 30 paisa, because that's when the bargains are there. So typically when there's a crisis on the street, when there's blood on the street, you'll find up-team bargains. I mean, the FMCG stocks are all up 3x, 4x over the last 3-4 years. You got great bargains in these companies a few years back.
No, but for a person who's as sensitive as you are to valuations, how do you justify the premium or the scarcity premium that these consumer stocks hold? So where do you draw your value growth balance?
Well, beauty is in the eye of the beholder. Market decides what the PE of the stock is going to be. It's not my job really. The market will decide that anyway. My experience tells me that just because a stock seems overvalued on a matrix like PE is no reason to sell that stock. I mean, stocks can get ridiculously overpriced.
What matrix do you follow?
We just want to buy quality. We just want to buy quality, and we want to buy it at cheap enough price when we buy it. Now, if the market values this from 15p to 30p, that's not my business. That's the market's business to decide it. If I truly believe that on a market cap basis it makes no sense, then I will take some money out of the stable. But beyond that, I tend not to look at the stock on a monthly, quarterly. They will have a couple of bad quarters. That's almost guaranteed over time. But you have to take a longer view in investing.
So the likes of an ITC and an HUL, for investors who perhaps have missed out on the rally, are they opportunities to buy on every dip?
I don't like to go on recommending stocks to people on there because I might sell it tomorrow. And, some untoward incident might happen in these stocks. But the matrix I suggested to you at the opening question, good growth story, good cash flow, good dividend yields, that's the place to look at.
Your interest in Castrol, I mean, what's the kind of outlook you have for the company? From a market perspective, slightly illiquid, expensive stock, but what's your
It's had a good run. It's had a good run. Yeah, it's along with the so-called FMCG basket, it's had a good run. It has a very stable cash flow yield. The company pays out, I think, 80% of the profits in dividends every year. Okay, 80% of the profit. The return on capital is phenomenal. Okay, the book value is low because they pay out so much. If you look at book value to price, you'll say it's too expensive. But look at 80-85% payout of a stable earnings cycle. And Castrol has big plans in India, so it looks reasonably okay to me. But it's had a good run. I'm not saying that we bought it a while back. So
okay,
it's making new highs. Yeah.
All right. What about aviation? I mean, does the conviction still stay?
Aviation, we had one good round. We made a lot of decent returns. Jet went from 150 to 900. It's back to 350, 400. See, it puzzles me how FDI in aviation doesn't still come in India. I mean, it puzzles the hell out of me. But, there are powers greater than me that can't understand this. I'll just tell you one thing. The global industry is consolidating, all right? And in America, for example, we use that as a model. American Airlines are making something like maybe $20 billion from excess fees that they tack on. You want to check in baggage, you pay a fee. You want a blanket, you pay a fee. You want a meal, you pay a fee. We've not gotten to the stage yet. We will get to it as the industry is consolidating. We'll get to that field. We're just not charging for baggage yet. All right, our rates are still lowest probably in the world for short-haul journeys out there. So it will represent a good opportunity sometime. But
But minus the FDI news?
Probably not, because they're very weakly capitalized, the balance sheet now. So they probably need capital, without which they'll have a trouble. But this, just think about it as one impregnable business. I mean, you cannot have a country without an airline. I mean, you have to have an airline. And what we've done by not acting, what the Indian government has done basically, is made Emirates and Singapore Airlines a national carrier by default. I mean, Emirates has more flights than Air India times 3. And Singapore Airlines takes all the traffic eastward. So what we've done is we've exported our markets to aviation. Here's a government that wants to promote domestic and is still crippling that industry and exporting the aviation market via Emirates and Singapore Airlines. Great airlines, by the way. I fly them all the time. But I'm sure Jet could do a fabulous service if they had, a more level ground.
But having made your money in aviation at this point in time, would you recommend it?
I really don't have any positions in it right now. As they say, show me. I'd rather have the FDA and aviation bill come through before I put money in there, because this has been delayed so many times.
Okay, you also like takeover candidates, acquisition targets, United Spirits. Is that a high conviction idea?
It's an old favorite of mine. We made a lot of money in the group out there, and you know, well, a lot of people have had other experiences with Malia, but I had a great experience. I mean, to give you an idea, in 2004, there was 200 crores market cap. These companies, they were so cheap. The Indian liquor market was, you know, $100 million. You could bought all the Indian liquor companies out there. So they had a great run after that. Having said that, Mr. Malia is in a corner. It is my belief that he's in a corner, that he will have to act in order to save himself and save his empire. The only reasonable proposition for him is to sell a stake in UB Beer, which is already 37.5% by Heineken, 37.5% me. So he sells that, makes 6,000-7,000 crores, or sells in United Spirits and, you know, in catches of that. Market has it, both sets of rumors are going around. My sense is that United Spirits is a more logical candidate for him to sell, which means there will be value unlocking in United Spirits. I happen to own those stocks, so let me make it, I own both of them, so let me make disclosure. But if you are a betting person, I would suggest that there seems more traction in United Spirits.
They're attractive at these levels.
What happens? Yeah, I mean, United Spirits is half the market cap of UB Beer, though it's by far the more important company. It is the leader in terms of volume sold globally. And India is a 21-year-old market. It's a dream for alcohol makers. So I think it'll do well over time.
ID majors, Infosys and Satyam, you know, I remember you mentioned these stocks at the start of the year, saying that, you know, if valuations corrected, you could perhaps be looking at them. Given the earnings derating that's happened, from a valuation standpoint, the large caps and the mid caps, what are your thoughts?
You know, I'm bullish on software industry. Infosys is going through its pains. You know, companies go through a period of pain. They will sort it out, no question. You know, to your readers, I would suggest an article by Mark Anderson, who founded Netscape. You know, Google it sometimes. It says software is eating the world, and you understand the importance of software. But so I think my picks in that area, say maybe TCS and Geometric, both of which I own. We like the stocks. But I think increasingly the market should also start looking at hardware stocks. Maybe the play is not literal in India and not lateral in India. Maybe you have to look at it overseas. But cloud computing is going to be a huge phenomenon in the next 5 to 10 years globally.
What about a concept like HCL Info?
I don't want to comment on that particular stock because, you know, I do have a position in it, but there are a lot of takeover rumors buzzing around it. But so I don't want to comment on it. But hardware is going to be a very attractive place 2-3 years down the road.
The other two sectors where I thought, you know, you had interesting views was real estate at the start of this year and also media. You think they've delivered? I mean, they still are off the radar.
You want to talk about media first? I'm sure all you guys don't know media. Look, you know, to me, media is what alcohol industry was in 2003. They're throwing it away. They don't understand the value of their own, you know, businesses. I think the part of the problem is that digitization has not yet come in. It's been postponed. I've heard the deadline for whatever it's worth is November 1. If it happens, I think media stocks will get re-rated. We are particularly bullish on the content providers, not necessarily the distributors who could use 4G to have the business model cut out under their feet. But broadcasters, content will be king. You have to look for plays within that, people who produce content. Go look at a neighboring market. Indonesia has done so fabulously well in its media stocks. So it looks okay. Real estate, selectively. I think there's a disconnect between the prices of property and the prices of real estate stocks. So, you know, I'm comfortable buying those stocks.
One more theme, and that's infrastructure, because there's just been so much said about, you know, the push that the sector needs. So many vehicles have been created to ensure that there's money supply into the sector. What's your view, and, you know, what's the kind of area of interest that you're drawn to?
You know, on a risk-reward basis, it makes sense. Typically when, you know, the stock is so beaten out, stocks in that sector are so beaten out, so bombed out, you know, that they, you know, necessarily offer value. And if India has to continue to grow at 7% and they can survive, these companies are normally debt-laden, they can survive. Some of them will throw you great opportunities. But as I mentioned to you, you focus on some sectors in your life, and infrastructure is not one of them. So I'm no expert on that sector. But I think they will do well in a market rebound.
What would you say to the investor watching you right now who perhaps has lost faith in equities?
I'll end by saying this, that a ship is safest when it's in harbor, but it's designed for the high seas, okay? So is the investment portfolio. You might think it's safe because it's in a fixed deposit out there, but if you want to be wealthy, you want to be financially free, you want to grow your income, you better take some risks and put it out there. The trick is to finding the great companies, finding the great stocks they can hold over a period of time. You think of yourself as buying a piece of a business and not a stock itself, you know. You're buying a piece of a fast food chain, buying a piece of a jewelry store, buying a piece of an FMCG company. Think of yourself as an owner. I think you'll do a lot better than FDs perhaps.
I hope people are listening. Thanks very much, Ramesh, for joining us for today.
Always a pleasure, Tanvir.
And giving us your views. With that, we come to the end of this special edition of ET Interview. Thanks very much for watching.